Okay, super. So thank you all so much for joining us tonight for VetYou's second online discussion on financial planning, surviving the now to prosper tomorrow. We've got a jam-packed hour for you, but this is of course your time as well to use the founders of VetYou and also Andrew Snowball, our awesome financial advisor as well. So I'll just let you know who we've got on here to start with, because there's a few faces that are going to pop up throughout today. So we've got Ben Sweeney and Matt Dobbs, who are going to be kind of leading the show today. We have got Andrew Snowball as well, being the financial advisor co-host. We've got myself, Paul and Gudrun, who will be in the chat, and I've also kindly invited on some coaches as well from the vet profession to support with helping us to kind of reframe finances, as like we all know, we've been put into a real uncertain time, and finances is definitely coming up as a key stressor as well. And we have Libby, Caroline and Adrian, I hope, as well on the group too. So they'll be on hand also. So I'm going to hand over to Ben. If you don't want to ask any questions or put stuff into the group chat, then you can also direct message me in Zoom. And for those watching on Facebook Live as well, if we don't get your questions or comments through, we will answer them later. But I'm going to hand over to Ben Sweeney.
Cheers, Ebs. Evening, everybody. I hope you're all managing to occupy your brains enough, those of you who are at home all of the time, those of you who are still in clinical practice all day, every day, hats off to you, you're still doing an epic job. So yeah, it's obviously strange times, but it's great that as a profession, it's really been a privilege to see everyone come together. But of course, most of us are here tonight because this particular time has thrown up a lot of question marks as regards finances for individuals. I think first and foremost, what we as a group have sort of come together to say is we want as our key message is that you aren't in this alone. I think, everyone's financial circumstance is slightly different, and some of you will have questions tonight that are very pertinent and specific to your own circumstances. But what we would say is that whilst we will answer as much stuff in generalities as we can within the group, some of those questions may, as I say, require specialist help, in which case that we will defer you towards the likes of Andrew, who is a font of all knowledge in the financial sphere. And if he doesn't know it, then he will send you to someone even higher up the financial chain who'll be able to guide you and help you make the right decisions. I think importantly for your own set, you just kind of got to go, look, this is what I want out of this session. If you've got a question, bang it in the chat group and we'll see what we can to either answer it live on air, or we'll answer it in the chat box, or we will email you afterwards. I think it's important to point out that we may not get through every question. If we don't, we will collate every question and send it out to everyone who's attended as a group of answers. There are loads of government resources out there that will again be able to signpost you towards, but they will be not necessarily specifically looking at your circumstances, but they will be able to point you again on that right path. Biggest theme of the evening, especially in the circumstances that we've got, is that cash is king, and at the moment having money in your bank is very much the important part, and we're going to hopefully guide you down the avenue of making sure that you keep as much of the cash that you get in your paycheck the end of this week, God willing, in your account by the end of next month and the next couple of months after that, while there is this degree of uncertainty. And whilst all of this financial health stuff is brilliant, your physical health is absolutely the most important part of that, because if you're not physically healthy, then having money in the bank, frankly, is not much use to any of us. So we're going to try and help you by alleviating some of the stress that you'd have associated with that side of things. Next slide.
Hi guys. we thought it might be quite useful if we talked through at this stage just a real situation, my situation, and hopefully that would bring to life some of the stuff that we're then going to talk about later on in the presentation. So I'll set the background initially. I'm married to Naomi, both of us are vets. She is still a clinical vet in practice. I diversified out of clinical practice a couple of years ago, and now I do business leadership, management consultancy, coaching, that sort of stuff. But really for this, think locum, think freelancer, think self-employed, multiple streams of income. It is sort of where my role is. I've got a house with a mortgage on it, a cat, a dog, and 2 kids. I've got a 4-year-old and an 18-month-old. And so Naomi has recently gone back to work after maternity on a part-time basis. Everything was going great. And then two weeks ago or so, we woke up and suddenly all of my work, all of my income, my diary basically just said no. And my income went from looking quite good for the next few months to 0. And rightly so. All the companies I was working with didn't think it would be a good idea to get me out and to get all their team together in a nice closed room to have a chat about this, that and the other. Absolutely. So what do? Income's gone from nice to 0. So we sat down and had a chat about income and then had a chat about our expenditure. We couldn't think of a way of me quickly increasing my income. Yes, medium term, there are things that we can do, but short term, there wasn't much that I could think of doing. But for Naomi, there definitely was. We could increase her work. And so she got in touch with the practice, and now she's pretty much gone back to work full-time now. And I have now gone to doing full-time at home. So literally overnight, we've gone from me being the sort of primary breadwinner and Naomi doing a lot of the childcare to switching overnight to now Naomi's the primary breadwinner and I'm the one who is at home doing daddy daycare. All very different. So we worked through our income that way, and then we spent a fair bit of time over the next couple of days trying to work out what to do with expenditure. We've got a 3-month break on our mortgage. We've cancelled gym memberships. We've gone through all of our expenditure to see if we can reduce it, just to sort of realise that our income has crashed, and so we've got to pull our expenditure back. Because of that. So very, very quickly, a big mindset change. It's not right, it's not wrong, it's just what we've done, and we're just going to keep monitoring it. I don't think everything we've done is correct yet. There probably will be more stuff to change as and when the situation changes. So that was just to hopefully bring to life a real example of what we're going to talk about over the next sort of 45 minutes.
Thank you, Paul. That's really interesting and useful to hear, because as we've heard in lots of the other discussions happening across the profession, from the BVA to the VDS, this financial situation is part of all of our challenges and all of our opportunities as well, and it looks different for everyone, but it's so important to see other people's as well. So we're just going to have our first poll here. So get ready. So what is your biggest financial concern at the minute? So are you worried about losing a job and paying the bills right now? Are you worried about deferring any long-term goals, i.e. stopping paying into pensions or savings? Are you mainly worried about a wage deflation or career progression for the future? Or is it something else? And if so, pop it in the chat box to everyone if you're happy to share. And if not, you can share privately to myself as well. So what have we got? About 30% worried about losing the jobs and paying the now. About 15% saying worried about those long-term goals. About 25%, a quarter, worried about that wage deflation and career progression. And then we've got about 30% with other. So in the chat right now, it's business cash flow, currently buying a practice, no income, being a locum. Again, a lot of the freelancers here have no other sources of income, especially as well because of the way they've set their companies up as limited companies and others. So that seems to be happening. And then in Facebook here, yeah, Lacey's just put a deposit on the house as a locum and now have no income. So that's where we're at. So we're a real split here between these things. This just helps show that everyone's in a bit of a different boat here. And so talking about surviving the now is important, but also that future piece as well. We've got to try not to forget about that as well. So over to you, Matt.
Great. So I guess what's understanding what that survey says means that we're all in very, very different positions at the moment, and different stresses and different impacts on our current own personal financial position. And so I think the first thing we all need to really do is try to understand how our own personal situation is affecting our own finances. Because only once we really understand the facts can we then start to make some inferences and good decisions about the way we take our future. So as that survey pointed out, nobody's in the same position as you. So what you need to do is really pertinent and personal and bespoke to you and your situation. And so often that will mean you'll need to be able to bounce that idea off somebody else. And there's probably no better person than to do that when it relates to your finances than an independent financial advisor. If that step's too big for you just at the moment, then certainly that's why the team here at VetYou have put themselves together and in this situation is to be able to help you to bounce some ideas about what you should be doing in your own personal circumstances. And so therefore what you really need to start to do, just as we would advise our clients to do this when we're looking at the health of their animals, is to actually start to think about what the impacts are, what the inputs are, and write it down. So if we move on to the next slide, Ebony, it really goes to talk about understanding where you're, oh, sorry, I've jumped on 2 slides. Can we jump on to the next one? Yeah, so it's really about understanding where your current financial health sits. And while it might seem a bit long-winded to actually write this down, I certainly think it's very valuable to take some time out of your day to be actually write down what your income is, trying to understand what that is. For those of you that are PAYE, that'd be quite simple in terms of looking at your latest pay slip. But for those of us that are self-employed, often with more than one source of income, we might need to juggle that around so we can start to understand on an average what our income will be over every month, and particularly pertinent in the coming months. And then really we've got to try and work out how our income is going to meet our expenses. And again, writing them down and understanding what they are, there's no better way than trying to identify them to yourself. Often in our head, we think that we have a certain level of expenditure, but when we add up the credit card bills, we go through the bank statements and we look in our wallet at the end of the month and we realize that actually our expenses sometimes are considerably more than we had in our own head. And certainly if you run bank cards or credit cards, you forget about the odd transaction, the odd lunch out, the takeaway on a Friday night, the extra money spent in the pub prior to social isolating, and all of this adds up as part of your expenditure. So having it written down in terms of financial health check will really let you know where you are, and only when you've done that can you plan for the future. So we're now going to go through some of the areas that can impact on your income here and now.
Thank you, Matt. And I've just put in the chat box as well our VetYou financial health check support sheet that you can download if you haven't yet done this first thing, which is reviewing those finances. So Ben, just take us through the rest of what we're going to be talking about today.
Touched on it in my first bit. We touched on it on my first bit earlier, where your physical health is vital. To your long-term survival. Obviously, physical health is vital. Social distancing will do so much, but actually, stress and anxiety that we have about money, and I know because I have my own stresses and anxieties, especially when I get my wife's credit card bill on a monthly basis, that heightens our worries from that side of things. And, you know, we find ourselves in situations where we're potentially having sleepless nights, which will affect our physical health as a consequence of our financial health. So it can be tedious and it can be boring, but it is massively rewarding to come up with a plan and review your money and categorize it into, you know, what have you absolutely physically got to spend every month? And you will be surprised when we go through tonight, actually what you have to spend and what you can sort of get around a little bit on a monthly basis. I'm sure many of you, like me, will have noticed in the last couple of weeks, you've not spent as much on food going out, you've not spent as much on petrol and that kind of thing. In fact, my car has sat there for 2 weeks on the drive and not done a thing, so I've saved a fortune because it guzzles petrol. And I think, you know, having that picture in your mind's eye of what you've got available to you, looking at, you know, what contracts you've got, what plans are you on, which of these are essential, which of these, again, can we do without, or what are you maybe overpaying for? Paul touched on it in terms of his gym membership. Now, obviously, gyms are all closed at the moment, so, you know, that 30, 40, 10, 80 quid a month goes into the pot. There's things that you can offset that you're not using now that you can always pick up when times are good again. What we will notice is the fact that if we have a real assessment of what's coming in and what's going out, we can already plan for what's going to still be in our accounts at the end of next month. We have this mentality as humans where savings, we save specifically for one thing, and we create this psychological picture around the fact that that money is only there for that thing. But actually, a rainy day can come at any point to any of us, and for many of us, this COVID-19 situation is that rainy day, and that may mean that the house savings that we've set to one side may need to be utilized for other things at this moment in time. You know, there's other things that we can use, like borrowing money. It is dirt cheap to borrow money now. If you've got a good credit rating, which obviously not all of us do, and if the younger ones amongst us haven't had time to build up that credit rating, then you may not be able to get as much or a better rate as those of us who've been around for several more winters. But borrowing money short term is a great access point to getting the cash that you need, but we need to factor in, how do we repay that money back in the medium to long term, and is that a sustainable model for us? But I think, you know, it's looking at, how do we get through now? How do we get through the next 3 months? And then actually, how am I going to make myself fitter and healthier in a financial state after this next 3 months and into the next 6 months and then into the next year and the next 10 years and then towards my retirement?
Thank you. So let's just, as well, we've already been having quite a bit of chat on this in the chat, but let's have a little bit of a look at our employment status. I forgot to add, all the polls are anonymous, by the way, so no one can see where you're at. So I'm launching the poll now. So what is your income situation at the moment? You can kind of tick all that apply. You're employed as normal, pre-COVID. You've been furloughed. You're unemployed. You're a freelancer. You're a student. You might be in a temporary or different role to usual. You're living off your savings. You're on maternity or paternity, or again, you're other. And if you want to let us know, that would be interesting as well in the chat box. Just starts to show the diversity that's happening within the profession with regards to finance. And we certainly saw this last night in the VDS Sunday surgeries as well. So we've got, again, quite a mix. Got about 21% employed as normal, 15% furloughed, unemployed about 7%, freelancers about 37%, temporary roles 7%, living off savings 36%, it's quite high, and nothing in maternity, paternity at the moment, and then some others. So in the chat, we've got working notice was moving to locum work. Yeah. So that is interesting as well to note. And there's a great podcast by VetChat, which Ben interviewed some lawyers, that is really good about just summarizing in a global sense. It's really easy to digest and understand on the furlough implications to our profession. So I highly recommend you listening to that. So Ben.
Sorry guys, my internet just had a small little meltdown there for a second, so I've just got you back there. Okay, so we've touched earlier on ascertaining what our discretionary costs and what our fixed costs are, but of course we use terms that many of us actually don't know what they actually mean. So a discretionary cost is all of the things that we want but don't necessarily need. Now, obviously, many of us would want to go out for dinner at the minute, but we can't. So actually, that removes one of the discretionary costs off of our list straight away. But these are the costs that we have on a monthly basis that can be curtailed or even cut off short term. So, you know, things like your Netflix subscriptions, things like, you know, all of that. I mean, I dare say when you're on lockdown in your house and you didn't have Netflix or Disney Plus, then you know, you could actually have to resort to daytime television as it once was, which would almost become soul destroying. So, you know, there are other things that are available to us, but then there's our fixed costs. There's, you know, things that are our mortgage, our gas and electric, various different loans that we've got, insurances. But again, with many of these things, they're fixed at the moment of time that you review them, but they can be analysed and negotiated with your provider. Ultimately, with any provider of any service, they would much rather you be spending some of your money with them than none of your money at all. And invariably, their costs of provision are a fraction of what the cost of that actual service is. So what we have to do is say, look, you know, how can we negotiate them down as best as possible? But the other ones, the discretionary ones, we can cut them out if we need to. So they're the ones that are almost the easiest to jettison from our monthly expenditure. So yeah, so we've touched on these earlier. Again, I made mention earlier about the fact that my car's sat on my drive for the last 2 weeks. And only when we were thinking about this talk and things like that, I was like, why on earth haven't I, you know, we're fortunate enough to be a 2-car family. Why haven't I declared my car as being SORN and you know, saving the car tax on that? Obviously the insurance, you know, you can change that to things like, you know, third-party fire and theft rather than fully comprehensive. Now that may or may not be cheaper. We've looked at gym memberships and things like that we can cancel. Sky Sports have given you the option to pause your membership on that side of things. Again, we've looked at Netflix. All of these different things that you can do. That pensions, you know, whilst we look at the fact that the stock market has taken something of a dive, we can still, you know, whilst paying into a pension, because for the vast majority of us who are sensible when we're looking at this, these are long-term investments, not a short-term make money and get rich quick scheme. So we can still put money into that, but we can negotiate down what we're looking at bringing down. Again, Andrew from that side of things will be able to point you to the better use of what to do. You know, if you've maybe not got 200 quid a month to be putting into that pension, drop it down to 50 quid a month, drop it down to 25 quid a month, but he'll be able to give you the right kind of things. Absolutely don't cancel things like, you know, private medical insurance and cash plans, things that, you know, you may well need to call on in the short term. But if you then pick it up at a later date afterwards, it could be looking at being a significantly greater cost to you. I took my health insurance out when I was 22 because I do lots of stupid things. So I figured that, you know, I need to have this cover should I need to get back to work quickly. But if I was to take out a similar policy now, it would cost me significantly more on a monthly basis to get it now than it is costing me at the moment. So I think, you know, everything, as we've said earlier, everything is negotiable. And the vast majority of things, if we really break life down to its absolute needs and must-haves, there's very few of those.
So yeah, so to pick on that theme, I think we really are living in exceptional times. So that rainy day account, as Ben talked about, is now, and we know that many businesses are treating this as an exceptional time. Less than 29% of businesses paid any rent last month. So the rent quarter within London, for example, less than 30% of those businesses were paying rent because they needed to make some exceptional decisions to the way they were operating their business for the here and now. And those are certainly things that we need to think about. What can we do for the here and now to protect our income and our day-to-day money? So where might you be able to negotiate some savings from things that you maybe thought weren't discretionary? were some more fixed costs, and what could you do? Well, certainly if you're in really dire straits and you're in a rented accommodation, then certainly speak to your landlord. Many landlords are open to negotiations at the moment because they need tenants for the future. And for them having an empty property at this time, it's unlikely that they're going to be able to go and fill that with any other tenant. So if you're in that position where literally paying your rent is going to mean the difference between you being able to put food on the table and not because you're not working, then speaking to your landlord as early as you can in the situation certainly helps. If you're paying a mortgage, as you know, and as Paul explained earlier, most of the leading mortgage providers and high street banks are now able to offer you a delay in terms of the repayments of your mortgage, a mortgage holiday. Remember that that will increase the cost of the entirety of your mortgage over the lifetime because you will be borrowing the money for your property over a slightly longer period of time. But when you calculate the saving of a mortgage holiday over the remaining term of your mortgage, you'll probably find it adds only a very small amount to your monthly costs when you do start paying your mortgage again. So again, for anybody that is struggling with money at the moment, out of employment, possibly even those that are furloughed, then certainly consider speaking to your mortgage company, and the sooner you can do that, the better. Tax is another one, and very kindly, the government have allowed those on self-assessment tax returns additional time in terms of submitting their self-assessment and therefore to pay that tax. So that's a useful break. Unfortunately, for those on PAYE, not quite such a break. You'll still be needing to pay income tax as and when you earn money, depending whether you're still in work or not. Certainly, most of the banks now are being very consumer friendly. They want to make sure that they retain you as a customer for the period of time after the coronavirus. So if you've got any sorts of bank loans, these could be personal loans, these could be loans that you've taken out to finance large purchases such as cars, for example. Certainly speak to your bank sooner rather than later if you're struggling to make those repayments. Some have started to inform their customers about taking some sort of loan repayment holiday as well. Other banks are still reviewing this. I certainly know that HSBC, my bank, informed me today that they are looking at the opportunity for loan repayment holidays. I took out a loan recently, and so deciding on whether I can afford to carry on paying that now or whether I want to take advantage of any loan repayment holiday that might be coming in the future. Equally, a number of the banks are talking about extending credit terms on credit cards. I haven't heard of any specific examples, but I do know that some of the bank credit cards are looking about whether they can introduce an interest-free period. There are still some interest-free deals out there for credit cards, but you might want to snap those up quick because I know some of the lending criteria is going to get more difficult, especially as we get into the lockdown period as that moves from weeks to months. Whole host of other things that you might be able to also negotiate on if you use any professional advisors. Again, they're desperate to retain your income and your business after the coronavirus, so certainly have a chat with them. I know we're coming up to end of the tax year, April the 5th, so you might be thinking about employing an accountant to do your year-end tax return for those of you self-employed. It really is a buyer's market at the moment in that regard, so you feel free to negotiate with your accountant about what they're going to charge to do your tax return this year. And I know a couple of friends that have managed to negotiate a substantial discount from some of their professional advice they're on. And finally, have a look at subscriptions. Again, there are a few apps now starting to appear out there where you can temporarily suspend your subscription simply by subscribing to the app, which will then cancel your subscriptions or put them on hold on your behalf. Again, many people that pay a subscription, the beneficiary of that subscription doesn't want to lose your custom. So while you might have to withhold the benefit of whatever that subscription is, whether it's a magazine subscription, television subscription, or whatever, certainly there is the option maybe to pause that. Maybe you don't need to then reapply or resubmit a joining fee when you want to start that subscription again. So think wide and laterally. It's amazing how many things we pay for on a monthly basis. If you can't remember them all, I'm equally guilty of that. Have a look at your bank statement and it will clearly outline everything you're spending each month in terms of a direct debit or a standing order, and have a look at those and really ask yourself the difficult question, do I really need that at this time?
Yeah, and I think if you don't ask, you don't get. The worst someone's going to say to you is, no, I can't do anything. The best they're going to say to you is, yeah, of course, I can meet you somewhere in the middle. Yeah,
absolutely. And so we've spoken about a number of things this evening, and the first obviously was your health, and we've talked about how vital that is. And so any money that is required for your health, if you need to pay for your health in any way, whether it's through a policy like a health cash plan or a health insurance policy, private medical insurance, or if there's just some other regular payment that you need, be it for a prescription or for a service for your health, that's absolutely vital. Your health trumps everything. So if you need to raid those savings or that rainy day account to make sure your health is attested to, then that's something that you might need to do. But always keep a track of what you're doing if you are dipping into your savings, your rainy day savings. Make sure that you can plan to put it back, because those savings have been there for another reason. And have a look at any penalties that there might be if you have to withdraw savings early. A number of savings accounts have a penalty if you withdraw without a notice period or within a defined period of time after opening their bank account. So try and avoid those penalties, those needless penalties in those situations. If you need to dip into some of your longer term savings, so if you're thinking about remortgaging or cashing in a pension, these are really very, very in-depth decisions to be making, and absolutely one that you should be taking some advice from. So if you're needing to reach to those levels of dipping into savings, then definitely speak to an IFA or your bank before you make those type of life-changing decisions.
Yeah, and Andrew, do you want to make any notes on there as well?
Yeah, so look, there's at the moment, can you hear me? Yeah?
Yeah.
Lots of difficult decisions to be made at the moment. Ben's touched on it, Matt's touched on it in terms of understanding where you are now. So, you know, don't be precious about if you've been saving for a car, a wedding, a house deposit. The situation that we're in at the moment means that you have to be able to adapt and you have to be flexible. If that means ducking into your savings at the moment, then do that. That will alleviate any stress and maintain your health and your own mental sort of capacity at this time. As Matt just talks about, don't make any rash decisions. Talk to a financial advisor, such as myself. Talk to friends and family or fellow professionals, to see what they're doing and what resources they've been tapping into to help them navigate this, really difficult time. And just keep talking to people, and don't feel that you're on your own. You have access to VetYou and their affiliate partners who have access to lots of information and have lots of experience that will also be able to support you through this time.
Somebody's very kindly shared, there's a website called The Mortgage Brain, which is already identifying what individual mortgage providers are offering to their customers in terms of mortgage holidays. So if you immediately want to know what your opportunity is within your mortgage repayments, that website has got some up-to-date advice as to what individual banks and lenders are providing. It's a moving feast though, and literally hour by hour, day by day, different lenders and providers are changing what the opportunities are. So if we're talking about, if you do hit some dire straits and you're unable to function because you've lost your job or because you've furloughed and you really needed that additional income, or if you're self-employed and you're waiting for the government scheme to be able to support you in your self-employed status, then think about how and where you might be able to borrow some money. And lots of places, as you can imagine, would want to lend you money, but not always at a favourable interest rate. Clearly, borrowing from families and friends is going to be one of the cheapest options, providing you get on with your family and friends. So have a think about if it's a short-term loan and if it's something that you think you are able to ask of your family and friends, that they might be able to help you tie you over from one month to the next. If you've got a bank account, many bank accounts will offer an interest-free overdraft to a certain limit. These are often always very flexible. So again, speak to your bank about the level of your interest-free overdraft, and it may well be that they can offer you an extension of your available credit via that overdraft. Often a very simple thing to do. That will typically only be for a very short period of time, so be aware when that period runs out if you are offered an extension to your overdraft. There are also a number of interest-free credit cards still available, so check out the price comparison websites and you can certainly find some good deals and some good offers depending on your personal circumstances there. Again, the limits on those credit cards sometimes aren't huge, so don't necessarily rely on that for paying bigger payments such as your mortgage, for example. You'd be much better off if paying your mortgage is a problem, speaking to your mortgage provider about finding us a solution to that on a monthly debt basis. If you've got a great employer, which I'm sure you probably all have, they can also lend you money if they're in that, if they have that ability at the moment, through an interest-free loan, which could subsequently be paid out of your future paycheck. So particularly those in independent practices, you might want to speak to your boss if you're really finding it a struggle with money at the moment. And finally, another area to look for finances, and again, a number of banks are looking to offer some very favourable rates to their customers at the moment, but possibly think about a personal loan from your current bank provider. That's normally where you're going to get the best type of deals. If at all possible, when you're trying to look at borrow money, there's a few areas obviously you want to try and avoid, things like payday loans, and just, you know, many of the credit cards that are available to people have very extortionate rates of interest. So wherever possible, if you're thinking about using a credit card to cover some short-term debt, don't necessarily think that your current credit card provider is going to offer you the best solution. They may not. So always check the small print as to what that's going to cost you.
And Andrew, anything to add on that?
Just to echo what Matt's just said, in terms of, I guess, additional finance, there's lots of comparison sites in terms of whether it's credit cards, whether it's loans. Excuse me, make sure that you shop around. Don't just take what's first on offer. I would say that it is always worthwhile to speak to your bank initially and to see whether they can help you. That's just because they know you, or at least they've got your credit history, and they might not do an official check, and they may be a little bit more lenient in their requirements in terms of offering you that line of credit. I wouldn't ordinarily encourage people to take on debt, and the first point of call is address your current expenditure, has been alluded to before, and then, you know, needs must. This is a final kind of option for you. So if you can't get it through friends or family, then look at the interest-free options. Don't have a knee-jerk reaction in terms of if you've got investments, whether that's pensions, whether that's ISAs, whether that's other types of investment products, and taking cash out of those. Because of the drop in the markets, you know what you're going to be doing is crystallizing a loss. So look to access other avenues of credit or cash resources, and then potentially those things at the final stage. But sorry, just before we move on, just always speak to others. I think where we are at the moment, continue to speak to those around you to see if they've got any other ideas as well.
Yeah, I couldn't agree more than. It's been great. The chat going on within the Zoom room is lovely, and people are already helping and supporting, providing some really good food for thought questions, giving you perspectives as well. And again, can't hammer home enough how useful Andrew is, my financial advisor, and I can't hammer home how useful he is. And also Libby, who's in the chat as well, has helped me with my financial kind of mindset as well. Because I think it's a two-pronged thing. It's in the mind, but actually physically taking action and coming out of that emotive state into that action state and being proactive and really personally owning my financial situation. So Ben, some positives.
So yeah, can you hear me? Yeah, there we go. Right. So yeah, so we touched earlier on the various different things that, you know, we spend money on that almost we don't even notice on a daily, weekly, and monthly basis. You know, as I say, petrol is cars parked on driveways. We've discussed ways of saving money in terms of insurance, in terms of signing them off the road. But the obvious one is petrol. Eating out, you know, again, if you're really strapped, we've had a complete mindset change as a family, one that we probably should have had several months ago when my son was born, but we never quite got round to it. So we still ate a load of takeaway and a load of rubbish. But we now batch cook, you know, we whack stuff in a freezer. Now, of course, not everybody's got loads of space in their freezers, but it's, you know, rather than doing a meal for one meal, do a meal for 4 meals and stick 3 of them in the freezer, that kind of thing. If you've got the space to do that, 1, it saves you time. 2, it saves you stress. 3, and most importantly in this circumstance, it saves you money. Holidays being cancelled, again, obviously people that have had flights booked and things like that, you know, it's important to wait for them to be cancelled rather than stopping them yourself. Because of course then insurance policies will kick in and so on and so forth. Entertainment, if you must have a you know, an in-house go-to streaming service, that I can highly recommend Disney Plus. But if you're trying not to spend any money, then don't get Disney Plus, because you'll not get anything done with the rest of your life, because Aladdin, Little Mermaid, all of these things, you will not achieve anything. There's 500 movies. It's amazing. But we digress. So, you know, you have all of these things. I live in Liverpool, so there is an endless amount of money spent on luxuries. I am really looking forward to seeing all of the women in this city that haven't had Botox or lip fillers or anything for 3 months. And you'll notice that the Instagram streaming of pictures has kind of stopped from most of them, because things are starting to wear off. But all of these things that we spend money on, your Amazon account, cancel your Prime, because it could be the devil in terms of what you're spending. Is it's so easy to go through that 3-click process and just, oh, that looks nice. Oh yeah, go on, let's have a look. Oh crap, I bought it. And you know, that is so easy to do. You know, staycations, go and have a picnic in your garden if you've got a garden. You know, wait for a nice sunny day, load up a box, take it outside, maybe look at a different fence to what you'd normally look at. But, you know, there's so many things that you can do at home. I think certainly one thing I found really refreshing is having so many video conversations with people and friendships that I totally neglected for such a long period. And it's cost me sod all. Other than the beers that I'm drinking virtually with them over the Zoom meeting or whatever other meeting we're doing. So, you know, we will save money that we never even realized we were spending before. The important thing is not to blow it on other stuff.
Yeah, absolutely. And I've asked in the chat here what people are saving on. So people are realizing they're saving on childcare costs, on petrol, and things like that. Unfortunately, a few people have said oops to Amazon Prime. Naomi bought a power washer on Amazon Prime and she said oops. And Gudrun brought a punch bag at the beginning of all of this. And Caroline makes a really good point. Put anything you want in that basket and leave it there for 24 hours. If you want it again the next day, go for it. If not, delete it. It takes away that emotional impulse buy, which is great. And just notice as well with the staycation, we've got the Vet B&B Facebook group, which is people offering their homes for house swaps. So when this is all over, obviously not now, when this is all over, I know that so many people live in wonderful houses where you could literally swap for free and go and see another part of the UK as well.
Excellent.
Paul.
Great. I just wanted to talk here about who we can actually talk to. Quite a lot of us have mentioned it already, Andrew, Ben, Matt, about who to have a natter with. But a lot of our usual support networks have probably taken a bit of a battering over the last couple of weeks. We're probably not seeing people quite so much. I haven't seen my parents for a couple of weeks, maybe chatting on Skype instead of having a chat with my dad. People at work chatting around the cooler, all that sort of stuff. So a lot of the support network and the firing of ideas back and forwards has gone. So what's left? What's still out there, especially around the finances? Obviously, financial advisors, they're probably the first ones, the go-to people to have a chat to. But again, as we said earlier, if that feels a little bit too much of a big step straight away, if you haven't got one and haven't got a relationship already with one, then obviously there's us, there's VetYou to come and have a chat to. There's your family and your business partners and anyone else in your house that you're sharing with to just bounce ideas back and forwards off. You can do a bit of research yourself. We decided not to put too much on here about the government schemes that are coming up, because within a day it would be out of it would be wrong, or things were changing, because they're changing just so quickly at the moment. But going onto the government websites and trying to find out as much about it yourself can be very useful. I know the BVA are certainly talking about their legal helpline. If you're an employee and you're worried about what your employer is doing, what's changing, am I allowed to do this? Is my employer allowed to do this, etc. So if you're a BVA member, you can have a chat with the legal helpline there. SPIVs have been bringing out some fantastic advice sheets as well that you may have seen on social media. If not, go onto their website and have a look at those. But the main point for this slide is one of my other roles is as a trustee at VetLife. And I just wanted to raise again, hopefully everyone's aware of it, but I just wanted to raise again that VetLife is there for you if you need it. It's our veterinary charity. And I just thought I'd reiterate the three pillars that are available to you if you need it. The first one is VetLife runs a 24/7, 365 days a year phone line, anonymous, non-judgmental, confidential phone line. You can pick up the phone and talk to someone from the veterinary community, so they'll have an understanding of some of the pressures you're under, anonymously, and just have a chat. If that's all you want, just have a good chat. And we all know a good natter, a good whinge can help a little bit. They can also then take it further and signpost you to various other bits and pieces if needed. But that's a fantastic service, day and night. Just pick up the phone and have a chat. And the phone number's there on the slide. There's also, you can email, obviously as things have changed, people are feeling that perhaps they wouldn't want to pick up the phone. Well, you can email as well, and that will be anonymous, confidential. There's a way that removes the website addresses, so the email addresses, so that nobody on either side knows who's talking, so it is completely confidential. The second tier that VetLife helps with is if you get a diagnosis of acute mental health illness, depending on your postcode, depending on where you are in the country, it can be quite variable as to what your support looks like. VetLife can, within a few days, if you get a diagnosis of anxiety, depression, addiction, that sort of stuff, can get you help very, very quickly, within days rather than within weeks or months, which, depending on where you are in the country, that can be. And the third pillar is sort of the benevolent fund, the way you might think of VetLife in the past, which is they have money available to help people who are really struggling financially. That can be short term or that can be long term. It depends depending on your situation. It can be paying for CPD to get you back on your feet. It can be looking after your rent for a short period of time. It doesn't matter. It's there and it's available as a safety net if and when you need it. Now, we've obviously been chatting quite a lot because we're expecting that the current situation may well increase the demand for VetLife. And all I can say is that we've thought about that. We are ready, willing and able if you need to get in touch. Thanks.
Thank you very much. And I think here's just so important. There is no shame in talking about your financial situation right now. I have spoken to all the VetYou members about mine. I've obviously spoken to Andrew, my financial advisor. I've spoken to Alex. It's forced me actually to tackle something that I already found difficult to talk about. It was a stigma, but this is a time to talk about it. Everyone is in the same boat when it comes to changes, right? Some of us are probably more fortunate than others, agreed, but this is the perfect time to talk. And as Caroline said in her VDS training Sunday surgeries last night, have those conversations with your family and with your business partners about what you need, what you expect, how you can help one another. And as some people have put privately in the chat here, and actually Libby and I are doing this together, we're skill swapping. So we're exchanging our skill currency rather than cash to support one another in different areas of our life. And this profession is this world hopefully will not be bouncing back, it will be bouncing forward into a new way of being with lots of collaborative opportunities. And the vet profession is really good at doing that. You know, there are people on this chat that I know can help other people and vice versa. So just make use of the people around you and talk and talk and talk.
Yeah, I've got to spend 2 minutes here. Being honest about your situation is absolutely vital. Don't hide anything. Now is the time to be dealing with it. And to support what Ebony said there, I've been lucky enough to speak to about 60 American vets over the last 2 weeks, and everyone was unashamed about talking about their personal financial situation. It seems to be a very peculiarly British thing that we want to be able to keep some of these things to ourselves, and we get concerned about how other people will view us. So whether you've got, you know, too much money or not enough money, there's no shame in talking about your personal situation and working out a plan that's right for you and your personal circumstances.
Yeah. So we've got some questions coming in privately, so keep them coming and get some questions in as well. But we're gonna carry on and hand over the reins to Andrew as well to discuss now. We've kind of spoke about what we can do in the now. We're going to talk a little bit about moving into that medium and long term as well, because it's always important to keep an eye, even though right now I know I can't action much now, and actually finally I'm okay with that and there's no stigma around that, but I still want to know what I am going to be doing later. So I think that's really important to note. And then we're going to take some questions. So Andrew, over to you.
Hello, excellent. Okay, before I start, realise that we're short on time to get the questions in. Just wanted to point you to a resource as well. So there's a government-backed website called the Money Advice Service, so www.moneyadviceservice.org.uk. Really useful resource in terms of personal finance, and they've got a specific section on there now regarding coronavirus, so that's relating to the self-employed and the employed. So I'd recommend it. Those of you that are on today, excellent, thanks Sebs, go on there and check that out. It's really good useful resource. Yeah. I use that.
I'm a member of one of their Facebook groups. It's really helpful.
Excellent. Is that fake? Oh, yeah, and that's got all the updates on there as well. So what we're going to talk about today really is savings and investment. The purpose of this slide is just to highlight that when it comes to financial planning, it shouldn't be siloed or isolated. You've got to remember that it's all interlinked. And importantly, that the foundations of any good, sound financial plan is protection, because protection addresses the what if scenario. And that's what we're living in at the moment. So although we're not going to talk about protection specifically today, and someone did mention it earlier on, if you've got protection policy or health insurance that you're paying for, those should be the things that you keep, because if your health goes, then everything else falls by the wayside. So it's important that you have protection. So if you don't have it now, think about getting it in the future when your financial circumstances change. If you're able to afford it now, look into getting it now. Due to the current circumstances, insurance companies are changing in terms of what they're offering, how they offer it because of coronavirus. More recently today, I found out that some are now excluding coronavirus completely as part of their policy cover. So that's regardless whether you've had any symptoms or not. Click on to the next slide, please, Ebs. Thank you very much. So we're going to be talking about briefly about savings and investment. So I like to make the distinction between savings and investment. With savings, you're focused on the capital sum and not really interested about the return that you get. And investments, the minimum you're trying to do is beat inflation, and you are concerned about what you're going to receive as a return. Now, when you're dealing with money, it's important that you have a plan and an objective, and what can help you do that is if you segment your money. So the first thing you should have, if possible, is an emergency fund or an opportunity to act. Now, typically that should be 3 to 6 months of your core expenditure, and your core expenditure could be your mortgage, rent, council tax, food, things of those nature. We've already discussed today that depending on the provider you've got in terms of mortgage, you may be able to defer some of those to allow you to have greater disposable income, which can bump up your emergency funds should you need it in this time. Now, short-term money, that's anything that you're saving for, house deposit, car, wedding. Again, you're not interested in the return that you're getting for those, because what you want at the end of the period is the capital sum. With everything that's going on at the moment, you also have to be adaptable. So something that you've perhaps been saving for the future in terms of your a house deposit, as Ben alluded to earlier on, you're going to have to be flexible enough to tap into that now if you have to. Now, that might be an alternative to taking out debt. I don't recommend taking up debt usually, but again, as Ben mentioned earlier, debt is cheap at the moment. With interest rates being cut to record lows, again, you're able to finance yourself in the short term to make things easier and reduce the anxiety. Remember, if you are taking on debt, have a real good think about whether it's going to be able to, you're going to be able to service that debt both in the short term and the medium term. We don't know how long this will last for, so it's important that you make that assessment. Again, before you start, you should have looked at the financial health check. Before any investments or savings plans are made, you have to understand what your situation now is now and where you want to be. And you can't do that until you've interrogated your current income and expenditure and been able to determine a capital sum, a monetary amount that you can commit to on an ongoing basis, so it doesn't disrupt your savings or your investment. When we're talking about medium to long-term investment, some of the things you want to talk about to distinguish between the two is the level of access that you want. So as an example, if you are investing for the longer term, you may not need access to some or that capital sum for 10 years plus. Typically a pension might fall into that environment. Or if you're investing for the medium term, so that could be 5 years, 6 years, but you might want access to some of that capital sum, some or all of it, then you might be thinking of a stocks and shares ISA. If you flick onto the next slide, please, Ebs. I'll talk about some of those things shortly. So when we're talking about investments now, we're talking about mutual funds or collective investments. But to understand how those work, we have to understand that when it comes to investing, there's a relationship between risk and return. And when you invest in a vehicle, a mutual fund or a collective investment account, it's made up broadly of 4 asset classes. That's cash, bonds, property, and equity, so shares. And what happens is those asset classes are blended together. So the more shares you have in a product, the more likely the investment returns, but also the more risky it is. So that's called asset allocation. So that's just how much of your investment is put into shares, cash, bonds, or property. So it's really important to know that. And the reason why I say that is at the moment, there'll be a lot of negative press about investments and the stock market dropping. But that's just a snapshot of the FTSE, which is all shares. If you're invested in a well-diversified portfolio, and all diversification means that not all your eggs are in one basket, so you're invested across these different asset classes. So if you see the stock market drop by 25, 30%, because you're in a well-diversified portfolio, your investments may only drop 10% or 15%. None of us want to lose the value of our investment, but being invested in a broad, diversified portfolio minimizes the downside when things don't go so well in the market. If you could move on, slide please. So I previously talked about emergency fund, short-term money, medium and long-term. So your emergency fund typically would be in an instant access account or a current account. I would suggest that you keep it separate from your current account in terms of what your bills go into, because with your emergency fund, you just don't want to touch that. It's in the background. In terms of savings, you'll typically use a cash or a savings account or a long-term deposits account to be able to get a better interest rate. An alternative to that is national savings and investment products, which is essentially government-backed products. So they are 100% guaranteed. So if you've got, if you're of a cautious nature or you just don't trust banks, national savings and investments is a good alternative solution for your ISAs and your savings money as well. When it comes to bank and building societies, depending on the capital sum that you've got, you're only protected up to £85,000, where with a national savings and investment account, it's 100% guaranteed by the government. So I mentioned earlier on about being invested in mutual funds. Mutual funds are essentially the engine that drives stocks and shares ISAs, defined contribution pensions, which is what most of you will be in, and investment bonds as well. Now, when you hold a mutual fund and it's not in a tax wrapper, so tax wrapper is an ISA, a pension or investment bond with tax benefits, if you're not in any of those, the growth of a mutual fund has a tax capital gains tax allowance of £12,000. And all that means is that if your investment grows by £12,000, you can sell £12,000 worth and not have to pay any additional tax on that. When you purchase a mutual fund, what you're doing is you're buying units, and those units have a daily pricing which goes up and down. So your size of your investment is based on the number of units that you hold and the price of that investment. There's no limit in terms of how much you can invest into it. And with mutual funds, they can be aligned to your risk appetite. And that's, again, just how much risk you're willing to take. More importantly, how long you want to invest for and the returns that you're looking for as well. As I mentioned before, if you're looking for a medium type investment, you invest in stocks and shares ISA. There's a limit in terms of how much you can invest in those, which is £20,000 per annum. But the great thing about those is any capital growth, there's no capital gains tax allowance. Any income derived from it, there's no income tax. Now, you may invest in stocks and shares ISA, trying to beat inflation. But in terms of your investment objective, you may want access to some or all of those funds in the future, and the ISA gives you that level of flexibility. If you're investing for a longer period, then a pension's a great way to put your money. One, you don't pay any capital gains tax on the growth. Two, you get immediate tax relief from the government. So that means that if you put in £100, you get £25 back into your pot. And three, if you complete self-assessments, it could potentially help reduce your tax liability as well. So pensions are a great place to put your money. Mutual funds are the engine that drives the return and has tax efficient characteristics as well. Investment bonds, again, it's a tax efficient wrapper whereby you don't pay any capital gains tax on any growth. You're able to defer your income tax liability. Any withdrawals that you make from it that are within your 5% allowance is seen as a return of capital. So again, it's a good place to put large deposits because there's no limits on the investment that you can put in, and a good way of drawing money. Now, all these are just some of the main investment options that are available, and they allow you to invest in, as I mentioned before, a mutual fund, which can be aligned to your risk appetite. Whenever you're investing, going back to the beginning, make sure, first of all, that you have an emergency fund. This ensures that you stay invested and you don't act on emotion. So at the moment, the markets are a little bit crazy. However, if you were someone who's investing on a regular basis, you'd find that you're actually buying the same investments that you were buying a month ago at a discounted price. So if you've got the disposable income and the capital, and you have the capacity for loss, and you have the right risk appetite, now could be a great time to take advantage of the discounted asset prices in the market, and you could gain when the markets return. Now, I don't have a crystal ball, and I don't know when that's going to be, but the markets always return. It's just how long. And if, as mentioned before, if you've got the disposable income, now's a great time to invest. Now, I realise that I'm whipping through a lot of this, so if there's any parts that anyone's more interested in and wants to hear some more information on, then please let Ebony know or use the chat box. So I've got on here direct holdings, which is just holding an investment directly. So that would be shares in BT, Vodafone. They're more volatile, but there's an opportunity to get greater return, usually for the more sophisticated investor, and the shares can be obtained through a stockbroker, and that can be helped through a financial advisor. Bonds are essentially loans to companies or countries, and again, you can hold those directly as well. Next slide, please.
That's it, I think.
That was pretty quick.
That was really quick. You did a quick fire there, didn't you? So we've had a few questions in. So we are going to run it slightly over, but I do think it's worth it. There's a lot of information that's been said here. This is going to be recording. You can go back and listen, watch, pause, write down, think about action, and then get in contact with us as well. So Laura says, do you have a recommended resource on learning more about ISAs? Laura's moved here recently from Australia, so would like to know more about this investment vehicle. I'll hand over to Andrew, but I would say it would be really good to probably have a chat with a financial advisor on that. But Andrew, you can also.
Yeah, so if you're unsure, utilise the free consultation that Lighthouse have arranged with VetYou, and I'm sure Ebbs will be able to provide the link to that. That's just to give you to talk about your specific situation. If you want a resource, Ebony put the link into Money Advice Service. They have great material there in terms of all investment types. So that's the bonds that I mentioned, the pensions that I mentioned, and also ISAs as well, talking about not just stocks and shares ISAs, but cash ISAs as well, help to buy ISAs and lifetime ISAs also.
Cool, thank you. And then Ben, if you just want to unmute yourself, we've got a few locum questions here.
Yeah. Hit me.
How does the panel feel about imposing cancellation terms on locum work which has been cancelled? My terms are quite stringent and the practices are aware of them before booking, but I feel guilty charging them. Should I?
I think you know, it's a real enigma. You know, if it boils down to you keeping a roof over your head, then I think, you know, there are serious considerations to be had. Ultimately, you've sort of got to look at it from a moral compass point of view and say, well, look, you know, where does your particular compass point? That said, have a conversation with them. You know, it could easily be that they have an insurance policy that covers them for cancellation of these kind of things. So, you know, what you've got, it's all good and well saying, you know, I feel bad. If it's going to affect you staying solvent, then it's a conversation that needs to be had rather than just, you know, okay, well, they've cancelled, there's nothing I can do about that. First thing you've got to do with all of these things is engage with the practice, have the conversation and see where it comes to that. If they have insurance, then that's what you have an insurance policy for. If they've signed the terms, you've got the terms signed and they've got insurance, then in theory, nobody loses in that. But of course, what you don't want to do as an individual is damage relationships. But we don't know how long this thing's going to go on for. You know, it could be 3 weeks. We all know that that's unlikely given our chosen profession and our level of intelligence. So, you know, we know that this is likely going to drag on for a few months. So let's see how it goes. Most of us aren't going to have any bookings in as yet after the end of May, but you know, it could be that one piece of work that you've had cancelled keeps you solvent for another month.
Thank you. And on this again, we might not be able to answer this because it's quite specific, but I'm going to share it anyway. I'm a locum. I only started in November 2019. I haven't been taking a minimum wage salary yet, as paid a lot of tax via PAYE the rest of 2019. Only taken dividends so far. Was going to start minimum wage salary this tax year. Am I eligible for anything? I have savings, so I wouldn't qualify for universal credit or JSA. I think, unfortunately, I don't qualify for any help, but I just wanted to be sure.
When did you say you started locuming in that question, Ebbs?
2009, November 2019, sorry, 2019.
Yeah, so I know who sent that question in. Actually, I did reply to you privately offline, so just have a check if you haven't seen it. But if you've started locuming since the 6th of April last year, then unfortunately, this seems to be the line where the government have drawn that sort of line in the sand and said, after this point, there's nothing you can do. There has been a lot of backlash to that, so I wouldn't be surprised if down the line there is something by way of a sort of softening on that particular stance, but I couldn't give you any specific other than to say, as things stand at this moment in time, you don't qualify for any of the schemes.
Okay. And then we've got more of an ethical kind of dilemma here, which I open up to all panelists here. And it's an interesting one and something I can resonate with. I hope this is okay to post anonymously. What I'm also struggling with is the moral side of my little remaining locum work. Not working puts pressure on me financially, but it involves traveling. Is this really essential? And mixing with new people, so perhaps increasing the risk for myself and them and my partner when I return home at weekends. But as almost all of the jobs have been cancelled for the foreseeable future and the future is so uncertain, it's hard to turn anything down. I can't help thinking about my sister working as a human ICU medic, and that all our actions have consequences. So am I being selfish in accepting locum work just for making things a little more, just by making things a little more uncomfortable? Health before wealth, as we've all just quoted.
It is, I mean, so yeah, to agree with you vehemently. My wife is a pediatric cardiologist, my sister's a doctor, my brother-in-law's a doctor, my brother is a GP. I'm surrounded by members of the NHS, and their advice to us, well, I shall put it to you frankly, my wife's mother went for a walk with her dog, having had a cough a week ago, and she ripped her head off. It is that simple. It is horrible, and it's hard, and it is a real, as you point out, a moral dilemma. Our advice and our guidance is very, very clear. If it's not absolutely essential, don't do it. Now, to me, I would maintain that given so many of the things that are easy for us to access nowadays in terms of Skype conversations with clients, various different bits, the access of out of hours facilities on people's doorsteps in the majority of practices, then I wouldn't consider that essential. But that's a personal thing, and you have to do what feels right for you. But I would look at that conversation as if you were chatting to your sister.
Yeah, and Gudrun raises a good point. Anyone who hasn't caught up on those BVA webinars that is hosted at midday every Sunday by Daniela, they're free to watch back on the webinar. Vet gives really quite clear guidance about essential work and what is essential and what is not. So if you're having a query, go back and look at that. It will make a difference. Andrew, you've actually covered this, I think, but you might just want to reiterate. Someone saying, Heather saying, my income protection provider has already written to me to point out if I'm unable to work but isolated, they will not pay. And Yantha saying, I have not checked, but just a thought, would an income protection policy pay out in these circumstances? No work. I think you said individual, isn't it?
Yeah, so it's so it's covered for accident, injury, or long-term illness. And lots of the providers now are just excluding the actual coronavirus from their policies. So that's whether you've shown symptoms or not. And they've also said, as part of their exclusions, that whether you are self-isolating or you've been told to self-isolate, you won't be covered either.
Andrew, just on a slight extension of that particular one, I know someone from the locum community who's essentially not short of having a breakdown on the consequences of everything in terms of cancelled work, financial stresses, and so on and so forth. Now, obviously, a lot of income protection policies will cover people from a stress point of view, if they're signed off work with stress and so on and so forth. But I wonder, is there any insight in terms of those two things running alongside each other?
Good question. So a couple of things. Most income protection policies will have additional services where you're not necessarily making a claim. So they'll have access to mental health experts that you can talk to and to help you through a particular situation. Now, if the current situation leads to a mental illness, whatever that may be, if it's included in the policy, then you could claim based on that. What you've got to remember is that on each individual income protection policy, you'll have a deferment period. So first thing to do is look at the terms and conditions or the key benefits within that policy. And then the second thing is to look at the deferment period. So that is how long it will take before it pays out. So you have to make the claim as early as possible. Then you have to wait for the deferment period before any income's paid out. Does that answer your question?
Yeah, I think so. It's more just a case of knowing, because obviously I know on my particular policy, it says, if you're off with a stress related illness, then you can still claim through your normal policy. But again, that's after so my deferment period is 4 weeks. So I know that after 4 weeks, if I was off work with stress-related stuff, I can claim for that. I didn't know whether they'd put any blockers, if you like, to that in the light of COVID-19, people suffering stress as a consequence of COVID-19, if that makes sense.
Yeah, so there hasn't been a specific update on a scenario like that, but knowing the industry as I do, the evidence has to support the claim.
Yeah.
So, you know, without going into too much detail, that's what my guidance would be. If this evidence supports the claim and it's within your policy, then they should pay out.
Okay.
Any other questions on there?
You're on mute, Ebony.
Just realised that. I was on mute. We've had some thanks through to the anonymous posters saying thank you for the session. I'm going to double check how essential I am for the hospital in providing emergency care, and if they can cope without me. And again, this is a really good reminder of just talking through everything with one another and linking to the resources that we've popped in the chat as well, and across on Facebook. We have run over slightly, but I think you'll agree. I hope that was helpful for you and practical. We're here. VetYou is here to connect you with experts like Andrew. We have a bank of wonderful advisors across the country who can also help you virtually. So I've put the link in there about how you can get started. And individuals and companies that Andrew works for have really kindly waived their initial consultation fee so that you can get access to that support. And it's up to you whether you take on financial solutions or not after that. Join the conversation like we do in these online discussions and also across our social media platforms. So we're at VetYou Community. And yeah, I want just to kind of say to people, what's the one thing you're going to action as a result of this session? Pop it in the chat box. We are more likely to take action if we say it out loud, write it down, and hold each all accountable. So I think it's just really, really important that we pick one thing. Because we've had loads of information thrown at us here, but I think just one thing makes a difference, and you can maybe action that for the week ahead. So I want to thank all the VetYou team here, and also the ones that were in the chat box as well. We had Gudrun in there. Thank you to the coaches as well, Adrian, Caroline and Libby, that were in there as well. Thank you to everyone who has been commenting and sharing. If you have any questions after this, you can email us or register with us, which I've put the link in, but we're at hello@vetyou.co.uk, or if you go onto our website, vetyou.co.uk, you can access us there. So yeah, any final things from the team on the chat? Or you guys, are you all good? All good.
Thanks for joining. Reach out if you need to.
Yeah, thanks for joining. And this is recorded. You can watch it back on VSG in Facebook, or we will also be emailed out a recording of this, and we'll have a look through any questions we might have missed. So thank you so much for being with us here tonight and gifting your time.
Yeah, thanks for hosting.
Thanks for having me.
Cheers, Ebs. Thanks for coming, everyone.
I'm going to message you, Ben.